I know that you've talked a lot about this idea of pot odds and your background when you were a caddy, and you had that, I think it was a caddy master. I forgot what their term is, the dude that runs you guys. And he used to take you guys for all your money. And one of the things he used to do is essentially wait to play the game where you guys are throwing stuff into the bucket until it was full enough, right? So he has this asymmetric risk profile.
Yeah.
How do you think traders have an opportunity to seek that similar kind of asymmetric risk profile, specifically using credit style strategies that are kind of risk defined right out, well, not risk undefined, capital income defined right out of the gate? I'm curious if there's any parallel between the way you think about that, or is it just a number of occurrences thing?
No, there is a parallel. It's not just number of occurrences. We look at it as probabilistically, regardless of whatever environment we're in, volatility wise, probabilistically, everything, strategy wise tends to be the same regardless of the IV environment. But when you have an opportunity to do something in higher IV, you can make more money. And that effectively means, that's our argument for pot odds from a premium seller's perspective. We also like the concept of, a very subjective part of pot odds is just price extreme. So, our preference is when something is up big to sell it, when something's down, big to buy it, only because there is the perception that, maybe, there's if something's down big, maybe it's got more upside than downside. And if something's up big, maybe it's got more downside than upside. The reality of that is that's a very tough argument to prove, because when something's up big, it still has the same chance of going up higher than it does coming down. We don't necessarily believe in mean reversion on price. And it's the same thing on down moves, but at least it gives you, again, it's another form of an engagement tool. The only thing that truly gives you a real pot odds advantage is doing certain things in incredibly high implied volatility. You take more risk, you make more money, period.
Right. Now, yeah, I think I saw a recent segment where you guys were talking about price mean reversion. And I definitely am the counter side to that. I definitely think that there's short-term price mean reversion, but I'm more curious about your perspective. So if you're a contrarian, but you don't believe in short-term price mean reversion, isn't that a contradiction?
Yeah, it is.
Okay, fair enough.
It is, but there's a big difference between a short-term trade and, it is a contradiction. It is a contradiction, but it's the whole idea of being a contrarian. This stems back to our days on the floor when you're essentially the counterparty to everything somebody else wants to do. So the misconception about floor traders is that you're trading based on what you think the market's going to do. And that's not how it works. Floor traders, all they did was take the other side of orders. So you don't come in the morning with an opinion of the market's going up or down. You go in the pit in the morning, and if the first order is to sell calls, you buy them. And if the first order is to buy calls, you sell them. And then you work around those trades over the course of the day. And that's how you basically make or lose, money. So you do not control what you want to do. You basically participate in what the other side of everything. So the whole idea of being a counterparty stuck with me my entire career. And to this day, I effectively look at myself as the counterparty. Whatever you want to do, I'll take the other side, as long as you give me a little bit of edge.
I dig it.
So that's not really kind of the classic. That's not necessarily mean reversion. It's more about just playing the role of the counterparty.
Right. You mentioned something that I'm actually really curious about, just from like a case study perspective, but how would you manage your book throughout the day? So as you're taking, obviously, order flow, you're taking an inventory. Do you have because there's no room on the floor, right? So are you just like legit memorizing this stuff, or do you have like a piece of paper that you're like, what's the method?
Both piece of paper and memorizing. You'd be surprised your capacity to know, what you're doing. Floor traders, we have very one-dimensional brains. These were not, most of us, including myself in this group, we're not very deep thinkers. But when it came to adding and subtracting fractions and memorizing thousands of trades and positions, you're like a savant. And so you can literally make, I don't know, there are days probably I made 500 or 1,000 trades easy. And I can remember everything I did with every person I did it with and how it affected every single position I had on. And you almost, surprisingly almost never make a mistake.
And that sounds like probably a source of your edge, right? Because then it speeds up your ability to make decisions more quickly, depending on what comes out.
Everything is speed. So, there's no way in that business to be successful if you weren't fast. The fastest person, the fastest person got everything, and you had to be fast. And you couldn't, the whole thing was fast and don't think about it. There's nothing to think about. You had to just be